Welcome, entrepreneurs! You've got a big decision before you launch. How should you structure your business? This choice isn't just legal, it can save you thousands in taxes every year. The two most popular options? The Limited Liability Company, LLC, and the S-Corporation, S-Corp. Think of them as two different routes for your business journey, each with unique rules and benefits. Choosing between an LLC and an S-Corp can feel overwhelming, but we'll break it down simply. Here's the key. An LLC is a legal structure, while an S-Corp is a tax election. You can even have an LLC taxed as an S-Corp. Think of it as choosing the fuel for your business vehicle. We'll show you how each works, how they impact your taxes, and what paperwork is involved. By the end, you'll know which option fits your business best for 2025. We'll use real-world examples, like a freelance designer or an online store owner, to make it clear. This guide is your roadmap to smarter business decisions and bigger tax savings. Tax laws change, but the principles here are timeless. We'll focus on what matters, how much you can save, and how each choice affects your daily operations. So grab your coffee. Let's dive in and set your business up for success. Your future self will thank you for learning this now. Ready? Let's get started. The right structure can mean more money in your pocket. Let's make your business work for you. Let's start with the basics. What's an LLC? An LLC is a legal shield that separates your personal assets from your business. If your business faces debts or lawsuits, your house, car, and savings are generally protected. Unlike a sole proprietorship, you and your business are not the same entity. LLCs are flexible and easy to set up, no board meetings or strict corporate rules. That's why they're popular with freelancers and small partnerships. For taxes, a single-member LLC is a disregarded entity. Your business income goes right on your personal tax return, just like a sole proprietor, but with liability protection. Multi-member LLCs are taxed as partnerships by default, with profits passing through to each owner's personal return. The LLC itself doesn't pay income tax. You do, avoiding double taxation. In short, LLCs offer simplicity, protection, and straightforward taxes. They're a great starting point for most new businesses. You get the best of both worlds, legal protection and easy management. That's why so many entrepreneurs choose LLCs first. Now let's talk S-Corp. An S-Corp isn't a business you form, it's a tax status you request from the IRS. You can start as an LLC or C-Corp, then file Form 2553 to elect S-Corp taxation. Why do this? One reason: potential savings on self-employment taxes. Like an LLC, an S-Corp is a pass-through entity. Profits go to your personal tax return, avoiding double taxation. But here's the twist. S-Corp let you split your income into salary and profit distributions. Only your salary is hit with payroll taxes, distributions are not. To qualify, you must meet IRS rules: 100 or fewer shareholders, all individuals or certain trusts, and only one class of stock. S-Corp are more restrictive than LLCs, but the tax benefits can be huge for profitable businesses. You'll need to run payroll and keep better records, but the savings can be worth it. S-Corp status is a strategic move for businesses with steady profits. It's not for everyone, but for the right business, it's a game changer. Let's see how the tax savings work. Here's the core difference between LLCs and S-Corp: how your profits are taxed. With a standard LLC, all net profit flows to your personal tax return and is subject to both income tax and self-employment tax. For example, if your business makes $100,000, you pay income tax plus 15.3% self-employment tax on the full amount. Now with an S-Corp, you pay yourself a reasonable salary, say $60,000. Only that salary is subject to payroll taxes, Social Security and Medicare. The remaining $40,000 can be taken as a distribution, which avoids the 15.3% self-employment tax. That's a direct tax saving of $6,120 on $40,000. S-Corp require more paperwork, like running payroll, but the tax savings can be significant. LLCs are simpler, but every dollar is taxed for self-employment. S-Corp offers savings if your profits are high enough to justify the extra work. The choice comes down to your profit level and willingness to handle more admin. If you're making steady profits, S-Corp status can put real money back in your pocket. If you're just starting out, the LLC simplicity may be best. It's all about matching your business stage to the right structure. Let's see this in action with a real-world example. Meet Sarah and David, two entrepreneurs, same profit, different tax paths. Sarah is a freelance designer with an LLC. She earns $80,000 in profit. All $80,000 is subject to income tax and 15.3% self-employment tax. $12,240 just for self-employment. David runs an online store, also earning $80,000, but his LLC is taxed as an S-Corp. He pays himself a $50,000 salary, subject to payroll taxes, $7,650. The remaining $30,000 is a distribution, not subject to self-employment tax. David saves $4,590 in taxes compared to Sarah. Both earn the same, but David keeps more because of his S-Corp election. Sarah's LLC is simple, but as profits grow, so do taxes. David's S-Corp requires payroll and paperwork, but the savings are real. This is the trade-off: simplicity versus savings. As your business grows, the S-Corp can make a big difference. The right choice depends on your profit and your tolerance for extra admin. For many, the tax savings are worth the effort. Let's talk about the key rule that makes S-Corp savings possible. The reasonable salary rule is the heart of the S-Corp strategy. If you work in your S-Corp, the IRS requires you to pay yourself a fair salary for your role. You can't just take all your profit as distributions to dodge payroll taxes. The IRS can reclassify low salaries and hit you with penalties. So, what's reasonable? It's what you'd pay someone else to do your job. Research salaries for your position and document your reasoning. For example, David considered his duties: production, marketing, shipping, and set a $50,000 salary. You don't have to pay yourself for every hat you wear, but your salary should reflect your value. Always keep records and consult a tax pro. S-Corp require a formal payroll system, regular paychecks, tax withholdings, and filings. It's more work than an LLC, but it's essential for legal tax savings. The salary rule is non-negotiable if you want to keep your S-Corp benefits. Follow it, and you unlock real savings. S-Corp tax savings come with extra costs and paperwork. LLCs are simple: file with your state, pay a fee, and file an annual report. S-Corp require more. Form an entity, file IRS, Form 2553, and run payroll. Payroll services can cost $50, $150 per month. You'll also need to file a separate business tax return, usually with an accountant's help. These extra costs can add up to $2,500 or more per year. If your S-Corp tax savings are $6,000, it's worth it. If they're only $1,500, maybe not. Many pros say S-Corp status makes sense when your profit is at least $40,000, $50,000. Below that, the LLC's simplicity wins. Always do the math before switching. The right choice balances savings with hassle. Let's break down the tax at the center of it all. The self-employment tax, 15.3%, is the big cost for business owners. Employees split this with their employer, but if you're self-employed, you pay both halves. For LLC owners, every dollar of profit is hit with this tax. If you make $70,000, that's $10,710 in self-employment tax alone. S-Corp let you limit this tax to your salary. Distributions are exempt. You're still paying into Social Security and Medicare, just on a smaller portion. The IRS allows this as long as your salary is reasonable. S-Corp strategy isn't tax evasion, it's smart planning. It's about structuring your pay for maximum efficiency. That's how you keep more of what you earn. So, how do you choose for 2025? If your profits are under $40,000, stick with a simple LLC. If you're earning more and can handle extra admin, S-Corp status can save you thousands. Think about your profit, how much you need to live on, and your comfort with paperwork. If you want simplicity, LLC is best. If you want savings and can handle payroll, go S-Corp. You can always switch as your business grows. Don't just copy others, look at your own numbers. Consult a tax professional to run the math for your situation. The right choice sets you up for success in 2025 and beyond. Make your business structure work for you. Your future self will thank you.